Hello and welcome to Gemcast.
What do we mean by infrastructure? Systemically important tangible assets.
Why is this interesting and compelling for investors? Why should they pay attention?
There is such little capital for the demand generated by far faster economic growth, urbanization, growing middle class. The projects that make it are actually really good quality, really essential needs. The quality of the structuring, the quality of the deals is very good.
What are the features that make a sort of well-designed African infrastructure deal?
Number one, clear pathway to hard currency, good quality counterparties, the bankability of the structures. Our edge is tailoring capital solutions to the need. You do need to tailor the capital to the context. The big difference for African infrastructure is...
Hello and welcome to Gemcast. Today I'm joined for the second time by Pranav Khamar, Portfolio Manager.
Yeah, no, I'm surprised he wants to be back, but good to be back.
Maybe it's a sign we're running out of ideas. I hope not.
I don't think so.
I hope not. So we're going to be talking about infrastructure today, specifically African infrastructure. But before we dive into that topic, and I didn't get a chance to ask you this last time because you were part of a pair, but tell me a little bit about yourself and your passion for emerging markets, Pranav.
Yeah, look, I've been working in emerging markets for about 15 years. But the fire still burns probably stronger than it even did before. I've been at Gemcorp for this is my 12th year. So joined in 2014, kind of from office number one.
Yeah.
we were on, I think, office number 3 at the moment.
Well, that's a good sign.
It's a good sign. In London office, by which I mean. But I think the watershed moment for me about actually getting into working as building a career focused on emerging markets was actually when I had a bit of a stint, dare I say it, in student journalism.
Oh, wow. Okay.
And,
you should be this side of the chair.
No. I'm good. There's a reason why it was a stint.
Okay.
Yeah, exactly. And I started writing a bit about the kind of the growth in emerging markets, like the early 2000s, kind of early 2010s,
Yeah.
and just how there was that real like decoupling that you were seeing between growing markets, the likes like China, India, but then also kind of Central Eastern Europe. It really kind of lit a spark that like, look, actually, this is not because of aid. It's not because of some political, I mean, to some extent, there's political environment that acts as a bit of the forcing function, but it was really the power of the change was economic transition, right, and investment, right, and I kind of actually getting to see that a little bit in action as part of some of the field trips that I kind of went on over that period. Really, I think was like I say, the watershed moment. And then when I kind of had the first opportunity when I kind of started working in banking to look at kind of deals in Central Eastern Europe, that was like, yeah, I mean, it clicked straight away, and yeah, the rest is history.
Awesome. Very, very good. Secret journalist. I did not know that. Okay, so
Keep the secret.
That's a new learning. Well, for a marketing person, you don't want to tell them that you can write stuff.
It's okay.
Yeah. So, look, we're talking about infrastructure, African infrastructure. So, look, let's just jump in with a pretty simple question. Like, why is this interesting and compelling for investors? Why should they pay attention?
Look, so we've been, I mean, we've been working on like kind of looking at infrastructure as a sector that we like for like certainly I've been kind of driving it since 2017 within the firm, particularly kind of likes of kind of energy, digital infrastructure. But look, we're now kind of casting our net wider, and we've certainly kind of grown our depth and scope of expertise over those years, and we'll talk about that. First off, let me kind of ask the question, what do we mean by infrastructure, right, in this context? And I think that it means different things to different people. The way I would kind of really characterize it conceptually is systemically important tangible assets.
Okay.
Right. Now, there are certain features, particularly in sub-Saharan Africa, that make it a compelling asset class. And maybe then to kind of draw that comparison with let's say more developed market infrastructure, and I kind of had a little bit of exposure to that in my banking days, and also like frankly what I used to do in Central Europe is now considered pretty developed markets. Look, I mean the big difference for African infrastructure is frankly just how untapped a market it is, and it's a bit Darwinian in the sense that like, because there is such little capital for the demand that's kind of generated by far faster economic growth, urbanization, growing middle class, and frankly, the lack of starting point. That actually the projects that make it are actually really good quality, really essential needs. And then because of also the lack of competition for capital, and this is a consistent theme that we talk about on Gemcast, the quality of the structuring, the quality of the deals is very good.
Okay.
When we were looking at some of the kind of equivalent assets, that did a lot of kind of these gas pipeline financings in Eastern Europe, kind of way back when, and you were looking at kind of leverage levels that, I mean, right now, I mean, this is like I'm getting into technicalities, but kind of 4 or 5 times earnings of the business, and even that was considered pretty sober compared with what you do in Western Europe these days. Whereas here in sub-Saharan Africa, I mean, we look at things 1-2 times earnings, right? So much more conservative. And then the underlying quality of the assets, right, we'll talk about as we go on.
So that compellingness really driven by this sort of survival of the fittest means that you're ending up with very, very high quality deals, but also these kind of massive sort of structural trends driving a massive need. And then, frankly, you're investing in things that are completely essential, right? That's just absolute everyday stuff that everybody needs to use. Right. Okay. That makes sense. Whereas if you're looking into different regions, it's a bit more complicated.
It's been done. It's a bit more, it's a bit more complicated because the air is thicker, like the market's more saturated.
Fine. I'm with you. So touched on a little bit. So you said sort of digital energy, but like, let's get specific. Africa is huge, diverse. So what geographies are you looking at? What sectors you're looking at? Obviously within that essential part, there could be a lot of things that are considered essential, right? So is my ChatGPT subscription considered essential? I don't know, depends, right? So how are we defining, how are we defining essential, and what do we mean about the sort of geographies that we want to go into?
I mean, it's funny you mentioned the ChatGPT point, because I think developed markets, AI is the new infrastructure trend, right? But look, no, for us, I mean, look, first off, like as it relates to Gemcorp, right? So our edge is tailoring capital solutions to the need, right? So, and look, we're not the first infrastructure investor in Africa, but I think we're bringing a fresh approach to it, a fresh Gemcorp approach to it, and I think the time is right for that. So we invest across the capital structure. I think if you look at the infrastructure market across sub-Saharan Africa, you do need to tailor the capital to the context. So if you look at, for example, West Africa, like, I mean, Angola is a good example, right? A lot of the infrastructure investment is sovereign backed, and therefore credit investment, sovereign backed credit investment. Drawing the comparison with places like East Africa and Kenya, I was there last week. The focus is more on private sector led, right? PPPs. It's a much more mature market for that. And frankly, that's where the quality opportunities in that kind of format or in IPPs are going to be. So having the flexibility to kind of bring the right kind of capital to the right situation is the first starting point. Then so that, I think that's kind of an overarching comment. Then let's talk about kind of in industries. So when we actually speak with many investors, the air is actually quite thin in terms of folks that really understand what that means. If I may just contend that. The depth of capital for renewables in Africa, it's pretty deep as it compares with kind of other kind of complementary sources of energy and complementary energy infrastructure. I think that's something that we might come on to in a bit. In addition to that, if you look at kind of where you are in the investment cycle, because a lot of the infrastructure investment in sub-Saharan Africa has either been directly kind of financed by DFIs, or it's been through DFI development finance institution backed players. They are by mandate inherently more focused on greenfield projects.
Got it. Okay.
What that kind of naturally leaves the door open for is capital recycling and kind of brownfield, right?
Yep.
Because I think that just from our humble experience, it's needed. Like if you're a developer looking at potentially a completely indefinite investment cycle for executing a project, you may not do it.
Yeah.
Because you don't know if you're going to get your money back at the end. On the other hand, for us, and I think a big part of this is also kind of proving the investability as a commercial asset class, that African infrastructure is a commercially viable asset class.
Yep.
We really, truly think it is. There's a lot of value in looking at brownfield assets.
Okay.
You have you can really get the kind of shape of returns that we like at Gemcorp, and we think investors are interested in, which is a solid kind of baseline, right?
Yep.
So you're not waiting 1 year, 2 years, 3 years, 5 years to get your first cash flows. And I think often is the case, like time is the biggest killer of IRRs, and you get to your kind of 5 years can easily turn into 7.
Yeah.
And a kind of a double-digit return can turn into single digits and even negative pretty quickly because of that. But actually having that stable baseline with then actually some scope for capital appreciation through that investment cycle.
So I guess from your lens, what you're saying is there are plenty of investors doing infrastructure in Africa.
Yeah.
But there's a skew to what they do. Often it can be DFI-led, which means renewables, greenfield, and there's space here to say, okay, let's be practical. Let's do equity and or debt, blend that together, and do brownfield. So, what would that mean for an underlying strategy then? How would it look? How does that impact the return profile, the risk profile, the duration?
So, really good question. So, first of all, good, reliable pathway to carry.
Yep.
Right, during the life of the investment strategy. And then fundamentally, because we're investing in African markets where the growth is inherent, right? It's not like you need to go and find it like AI.
Yep.
You've got a pathway to capital appreciation in that kind of medium to longer term.
Yep.
But you're not hanging your hat on it to stay afloat.
Yes.
Right.
Okay.
You've already got that positive carry, and that allows you to, as an investor, to run the marathon.
Okay.
Right? That look, if it takes a couple of extra years to generate that expansion or that that kind of adjacent strategy that increases the long-term value of the investment, that you've still got a decent base of returns that continues to accrue, that doesn't get diluted by time.
Okay.
And as an investment kind of asset class, I think that's really important.
Fine. And you talked about that sort of developer risk point about, projects just don't get developed or they take longer. That's obviously, I'm guessing, a sort of specific African issue, not one you see in DM as much, or?
I think it is. And I'll tell you why. I think, at least from our, let's say my more limited experience in DM, there is a market for development risk.
Yeah.
In sub-Saharan Africa, you can't get liquidity as easily at a development stage.
Yeah.
That also means that the capital is constrained. We talked about the survival of the fittest.
Yeah.
But it also means that it just takes longer to get things done. A lot of the infrastructure in Africa to date has been very government-backed led. Yeah. Which, look, I think it's the right thing. It does help a lot of these projects be when we talk about good structures and kind of very, very good quality structures, it does help with that. But to improve the execution, I think what we're seeing is really interesting opportunities, commercial led. Yeah, so where your off taker is a corporate as opposed to as a corporate or as a market as opposed to a government. You just need the right risk mitigation strategy.
And then you sort of maybe touch on the regional point. Then you talked about this sort of West Africa versus maybe East Africa in terms of the way that they're approaching the development, having a PPP or it being more kind of sovereign-led. You just talked about that there. Does that impact how you think about the regional allocation of capital, how you might decide what projects to do? Like, as in, do you want to balance those together? Is there a preference? And then, I guess, is there specific regions where you say, this just really makes it appealing here and it's less appealing here?
Yeah. So first off, solutions-led, right? Okay. So you don't want to we're not going to go and pitch renewables everywhere, because not every region is underpenetrated with renewables, right? Secondly, boots on the ground is very important. I mentioned before, like over the years, as we've developed our infrastructure strategy, we have some pretty strong platforms that we can leverage. So with Mbono, really built up a big kind of presence in Angola. We also have Osprey operating out of Nairobi and covering East Africa. That gives us kind of solid boots on the ground, solid on analytical capability that also puts us first in line for the opportunities.
Yes.
Then look, ultimately it is, it's back to the kind of the solutions-led kind of aspect of it, right? Okay. So I'll give you a very, very clear example. A lot of Anglophones, Eastern and Southern Africa, education is a huge cultural priority.
Okay.
I'm not saying it's not in other parts of sub-Saharan Africa, but it's non-discretionary spend.
Okay.
Right?
Okay.
If you're a household, and there's a huge shortage of student housing.
Right.
So if you structure, that's an opportunity. That's a theme that we're looking at. With a well-structured project, that's certainly something that we can see that could be a very interesting theme in particular regions.
Okay, fine. So that, I guess, that also sort of points that sort of the essential part of infrastructure can vary across regions as well. Right. So there is no hard and fast rule to say, well, this is essential here, but it's not essential there. Okay, that makes sense. So let's maybe just sort of change tack a bit and just pull a little thread that you talked about at the start. So at the start you said about, okay, there's this sort of Darwinian survival of the fittest part. That means actually default rates in Africa are lower than in many other markets you wouldn't always expect. And I know Felipe talked about that. But tell me, what are the features that make a sort of well-designed African infrastructure deal? What does it make it more resilient? Like, what are the things that you, when you're structuring, you go tick, 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 tick?
Yeah. Number one, clear pathway to hard currency.
Yep.
Number two, good quality counterparties.
Yep.
Or risk mitigation.
Okay.
But look, I think the commercial market approach. So, for example, you have one opportunity we're excited to be looking at is looking at generation that can be sold into the Southern African power pool, right? Which is kind of a nascent kind of merchant market. But overall, it will be some. I think on the most part, it will be some counterparties of good quality. So that will be important. Fundamentally, then, like looking at the quality, the bankability of the structures. I think that I've kind of made the point around we kind of see ourselves having very complementary offering to what the development banks do, but it's complementary, right? There's certainly a role for them in the projects that will be that we'll be getting involved with, and I think they do play an excellent role in ensuring that the projects that get done are bankable. Yes. And set up for success for the long term. Okay. One point that I would bring out in that sense in particular is from an ESG standpoint and community relations management. So there are some really good examples of how this has been done very well that we're quite familiar with. For example, at Lake Turkana, Winds of Change is the project's NGO, non-governmental organization. So when I was visiting the project back in September, we went to see some of the projects that they've done. They've delivered 100 projects now, actually more than 100 since their inception, kind of I believe more than 10 years ago now. So I mean, that is not trickle down economics, right? That is rising tide economics, right? Like the 80% of the project's employees are from the local area. 90+% are Kenyan, right? So it's a project based in Kenya. So you see assets like that become businesses. They are pillars of the local region, the community, and ultimately that is a kind of key force to having buy-in of the community of stakeholders, and that's a really important recipe for success in project execution.
Thinking about sort of maybe getting closer to my world, thinking of allocators. What do you think when you meet allocators and you do those client meetings? What are the big barriers that need to come down for African infrastructure to truly scale?
Yeah.
Because, it's a massive opportunity. There's a huge unmet need. But what are the barriers that need to come down for this to just fly?
Look, risk perception is kind of always going to be top of the list.
Yeah.
There's a bit of an education piece of that because the data already speaks for itself that you touched on earlier, right? In terms of the lowest project default rates. The second aspect is actually scale, right? Because it's a bit self reinforcing.
Yes.
From some of the allocators that we've spoken with, that Africa is just too small, right, in terms of the market. And I think this is also where the Gemcorp approach of combining kind of across the capital structure, right? Credit, sovereign credit, through to equity investments is right, because then we can deploy truly across the continent, have access to the full range of opportunities and the best quality opportunities, getting to the scale without sacrificing quality of assets.
Yes.
The last thing I'll say is secondary liquidity, right? But I'd say it's actually part of the solution, and I think actually the reason why that is currently still part of the problem goes back to that point I was making about greenfield.
Yes.
Right.
Okay.
That a lot of the investment has been in greenfield and not enough of it has been in providing secondary liquidity, capital recycling. There's some really encouraging trends that we're seeing. I've just seen anecdotally that kind of transactions are happening around infrastructure on a secondary basis in sub-Saharan Africa that I wouldn't have been able to say like when I started looking at the space.
Okay.
And also, look, you're also starting to see the capital markets kind of really, really get interested in some of the regions. I mean, just this week we had we're seeing the Kenya Pipeline Company IPO, and look, I mean, I was positively surprised by like this by the numbers and the quality of what's going on there. So I think that look, time will tell as to how that performs, but I think that in itself is also a bellwether to see, first of all, that there's a route in the capital markets for infrastructure, and that actually African regional capital markets are the home for that, right? You don't need to go internationally for that either. And I think one of the other things that we're really excited about with our strategy for African infrastructure is that is making it an opportunity for African investors to invest in.
Yes, to recycle money back into the continent.
Exactly, yeah.
Okay, that makes sense. So, look, last question. What does success look like for investors in African infrastructure? So I'm thinking about outcomes, impact, that social element you talked about, but also like returns.
Yeah.
What does that look like? What does the profile of success look like to you?
Yeah, look, let me first of all talk about that last bit, because it is like, let's face it, that is the most important aspect for this asset class to succeed. Yeah. So it is kind of a well-diversified portfolio that delivers kind of robust carry along the way, and then through that investment term of kind of, I think realistically you are in infrastructure looking at kind of at least 5, 7. Maybe in the right thesis, 10 years to realize capital appreciation as well. Yeah. And don't forget, you have those tailwinds of economic growth and urbanization and lack of existing supply that really support both of those happening together. But yeah, let's certainly come back to the to the social impact. I mean, it's almost inherent, because you are catering to essential needs. Yeah. Particularly given the dearth of existing existing infrastructure, that we're focusing on solutions to critical needs. But you have to execute it in the right way. I talked about managing kind of the community relations and ensuring that holistically your kind of project has a good impact. I think that is also essential. They are coexistent, right? Yeah. Like having a good profile in the community and very good quality engagement is ultimately a critical ingredient in the recipe for financial success as well. And then look, otherwise, I mean, we talked about scale as well, but let me bring that up as well. I mean, ultimately, we want this asset class to come out on its own and scale up. Yeah, right? And I think that is also going to be, I think, another evidence of success.
Okay, well, Pranav, thank you very much.
Thank you.
The secret journalist certainly told a good story today. So
Okay.
that was super compelling.
Don't worry, I won't be picking up my notepad anytime soon. But
well,
not a journalistic one, at least.
You can come on the podcast whenever you want. So I think it was just a great summary of a really interesting space. Covered a hell of a lot there. So if anybody wants to learn more about African infrastructure or more about Gemcorp, visit www.gemcorp.com. Thank you very much, Pranav Khamar.